Thanks for tuning back in. This is an advanced class. So Shantanu sir has already taken the basics class. By chance, if you have not seen the basics class, please go through it, understand it, and then come to it, because we have prepared the course like that from basic to advanced and further on. Okay, without further delay, let's start the class. So first thing, candlestick advance, there are a few types of candles. If I take you to the new slide, see morning star, evening star, hanging man, shooting star, dark cloud, white soldiers, and three black crows. So overall the market, if any of these patterns or any of these candlesticks are presented, these are generally a combination of candlesticks. If you find any of these candlesticks presenting themselves, you will get a entry or a exit, anything. Okay, first class, this class will be studying morning star. So let's get into the morning star, and further on we'll continue in the new coming segments in the next classes. Okay, morning star, if you start with morning star, so if you see, morning star will somewhat be a pattern like this. So market will be falling, generally it will be formed in the downtrend. Market will start falling, so and give a big red candle. Post that, market will give a engulfing bearish engulfing candle, market will give. Then market will give a doji candle. Then market will give a bullish engulfing candle. If this bullish engulfing candle covers almost or more than 50% of this candle, then you will be then we will be getting a positive sign that the market might change the trend, that the market might go top or the market might go long. So overall this combination of these three candles, two engulfing candles and one doji candle, will be known as morning star. Repeating, overall the combination of these three candles, two engulfing and one doji, will be known as, it's called as morning star, and that is our cue to be prepared, not the entry. Why not the entry? I am coming to that. If I take you to the white screen, say market was falling like this, one red candle, little bit of a doji candle, then another big engulfing red candle, then another doji like this, and then the next doji formed was something like this. So this is our cue that the market might reverse. When will be our entry point? So if a market has closed here, this can be a resistance point, because market has not gone above this. So whenever market next candle, if it forms like this, that will be our entry point. After a bullish engulfing, what this suggests? This suggests strength. This suggests that the bulls are winning the battle here. Bears were trying to push the market down, but the bulls had a draw here, and they have started winning the battle here, and this is the confirmation of them winning and pushing the market upwards. So ideally this will be our entry point, and wherever the downfall has started, that can be our target, or normal using of support and resistance, normal price action, wherever it is resisting, wherever the market has given a resistance, that will be our target, entry target. Generally this will be an ideal situation, that it has started falling down, so you will take a trade till here. So that will be the ideal situation, but it will not generally present itself. Okay, now there can be another case. If I erase all of this, see the market has started falling like this big bearish candle, two dojis, somewhat that, not exactly like this, somewhat like this, and then the market starts a bullish engulfing candle. This formation can also be considered as a morning star. So the qualities of a morning star will be, market will fall market will consolidate a little bit. Consolidate means move sideways. Sideways means confusion. Confusion means doji. So market will form somewhat of a doji, and then market will get a push. This is our Q, and when it is breaking the resistance level here, this will be our entry. So this is how we can use Morningstar. If I go to a live example and show you, see Tata Motors, spot the Morningstar. It's easy, it's on the screen. I know you guys can spot it. Yes, this is actually the Morningstar. Market fell, market started falling, fell down, made a bearish, a little bit of a lower price rejection, then a proper doji, and then the body of the bearish candle was broken. Here we can have entered here itself, in this candle itself, because already the resistance point of the candle was broken. This is a proper example of a Morningstar. Now see, if you had taken the trade, what was the percentage that we could have got? If I click here, if this was an entry point, since it's a day, first of all, definitely we would have got till here 5%. If we would have held the trade, if we would have increased our trade, we would have got a percentage of 12%. This is the power of Morningstar. So now what your job as students will be, backtest this candlestick pattern. If you find anything, see how successful it is. I can guarantee you it will be at least 70 to 75% success rate. So test this and see you in the next class. Hello everyone, welcome back to the second class of the candlesticks advanced segment. This class we are going to study evening star. Previous class we studied morning star. This class we are going to study evening star. Let's start with it. So if you see, evening star is also generally a 3 candle pattern. 3 candle pattern or formation, whatever you like to call it. So as you can see in the screen, market will be generally in an uptrend. It will give a bearish candle here, which is a significance of, it will give a bullish candle here. Apologies, this will give a bullish candle here, which will signal that bulls might be going for a longer period. Bull run will be going for a longer period. But next candle you will see that it is a draw. There is a massive confusion here. After this much of a engulfing candle, if you find a doji, that means a massive confusion. What we do, next candle, if it is a bearish candle and an engulfing candle, engulfing more than 50% of this candle, it is a formation of a evening star. That is, what is that? That is our cue to get interested. And next our entry will be when this level of resistance is broken. Okay, taking you to the white screen. Sorry, taking you to the So now somewhat the formation of a evening star will be like this: uptrend, little bit of a doji, uptrend, and a engulfing candle. Then you see market gives a doji. Then next candle, as I explained in the earlier class, might be a second doji or might be a engulfing. Whenever this engulfing candle comes, we will be interested. We might say that the market might start going down. We might predict, or we might see that the market will definitely go down. Okay. Now what will be your point of entry? If if the market breaks this level of support here, first candle it gives a breakout, enter the trade. Logically or ideally will be this one. If not, then the historical support point. So this is how we trade a evening star. Okay, coming to a live example. Okay, now see, I'll just continue the previous example. If you see here that market will be, I explained this is a morning star. If you see here, what is this? What is that? Evening star. Of course. So see, now I am explaining evening star, but if you properly see that the market will always move inside the technical analysis. Whatever technical analysis you will learn, you will find that the market will definitely move like that. Maybe not instantly, but the market will definitely move like that. Some period of time maybe it will take. See here 2-3 candles, doji candles were formed. Next when it broke this out, so definite short the market and close your eyes. This is a beautiful trade. Now also a proper resistance point, market is taking a resistance on a proper resistance point. On top of that, it is a evening star. Now one thing people might be having a little bit of a doubt here is, first doji candle here was a first engulfing candle here almost engulfed the upper bullish candle. But since I told you market is not ideal, if it is a evening star you will short in the next candle. No, you have to wait for the proper breakout. If you would have taken this trade, you would have hit the stop loss. I definitely agree. If you would have taken this trade, you would have entered into this candle, you would have hit the stop loss. Agree. But since this lower price rejection, wherever the market took the lower price rejection from in this candle, it did not break it. It was not a confirmation. I am telling you again, evening star is not a confirmation. Next candle is always the confirmation. After evening star, whenever you get the next red candle, that will be the confirmation. This is the confirmation. Short the market, we get a minimum target of a 2 to 3% here. So this is daily time frame. So this is how we use evening star. Again, same as previous class. Do back test it, see the success rate, and we'll see you in the next class. Hello all, welcome back to another class of the candlesticks advanced segment. This class we are going to study hanging star, or it is also known as hanging man. See, understand the concept. Whatever it is called, whenever you see the chart pattern or the the candle formation presenting itself, take the trade. Easy. Keep things simple. Okay, like directly getting into the what the class is. See, if you read the second point, it tells that it indicates that there was a significant sell-off during the day, but that buyers were able to push the price up again. The large sell-off is often seen as an indication that the bulls are losing control of the market. This point is an important point. If you read this, 50% of hanging man pattern is understood. Okay, read this again. Indicates that there was a significant sell-off during the day. Now, why it is telling that it was a sell-off? If you see this pattern, this candle, the wherever the circle is made, what the candle looks like this. Now, in your candlestick advanced class, Shantanu sir has taught you that what is this called? LPR, lower price rejection. What is the meaning? Market went down, but bulls were stronger in this point of price, and it has pushed the market up. So there is a selling pressure, but the selling pressure was lower than the overall bullish pressure or the upward pressure. Clear? That is why this candle is formed. The next candle, if it is an engulfing candle and be very mindful. If it is an engulfing candle, bearish engulfing candle, and the lower wick, that is this wick has been covered by the bearish candle, that is our cue to get ready to short the market. When you get another red candle, that is a confirmation, take the entry. The next historical support will be your target. Okay, just to explain it a little bit further in the white screen, generally it is formed in a uptrend. So market was going like this, this little bit, this, then a little bit of a doji here, then you get a hanging man or a hammer kind of a candle, huge wick, the body and a little bit of upper wick. The lower wick will be a huge one. It should be a huge or a big lower price rejection. Clear? If the next candle is a bullish or is a bearish engulfing candle, and it engulfs almost all of the wick or more than 50 to 60% of the wick, that is your cue that this pattern might be a hanging man and I might get a sell trade. The moment it breaks this level, we will short the market. There are a lot of support points here as per my figure, this one. So either one you can exit in the first support point, or if you feel that market is going to go further down due to the the overall price action of the market, it is going to go further down, or overall momentum of the market is further down, then you increase your trade each time it breaks the support level, increase your value and decrease your stop loss. Decrease your stop loss means here it would have been more, the price is up here, right? Means here it is 0, here is 100. So why I am telling decrease your stop loss, I am telling decrease in terms of value. If you would have taken this trade, your stop loss say was 110, immediately when you take another entry here, another increase your quantity here, your stop loss will be 105. So decrease your stop loss in terms of value and increase your target. This mechanism 110 decreasing to 105, this is a very important mechanism. So you will learn it as you go further, don't need to get confused about all of this right now. So overall the understanding of this is how we trade a hanging man or a hanging star pattern. Taking you to the live example directly. So what we have here, we have Adani Port. If you see the market in this range, see this portion, market was in an uptrend. See, okay, market was in an uptrend here, uptrend. Suddenly a huge wick candle with upward pressure, huge lower wick candle signifying lower price rejection, upward pressure here. Traders, bulls are trying to push the market upwards, and similarly bears are trying to pull the market downwards. That is why a huge wick here occurred. Next, bulls lost the battle, bearish engulfing candle. That is our cue. When this level broke, this was our entry. Right now, if you see here, market, whenever you took the entry, market went up. Right now, what will you do? What will happen here? You will hit the stop loss. Agreed, I am hitting the stop loss here. Stop loss is important to me. You will learn further while you go down the course. Stop loss is important to me. I am hitting the stop loss here, but next time when the market is breaking this level again, will I take the trade or will I not take the trade? I have to take the trade. I have to take the trade. See, if you do not trade this, if you are trading this system, this overall everything is a system. If you are trading this system, every time it breaks, you have to take the trade. That is what trading is all about. Say first you took the trade, next time it broke, you got scared. No, that will go into a arena of gambling. No, every time it breaks, you have to take the trade. Say if you're I agree, it will be a little bit psychologically, that it has broken, I did not get the proper target, it hit the stop loss, but decrease your quantity and take the trade, no matter, but you have to take the trade. If you took the trade, successful trade of around 4 to 5%. So this is how we trade or we use hanging man pattern. Thank you so much for listening and see you in the Hello guys, welcome to another class in the candlestick advanced segment. This class we are going to study shooting star. So I'll suggest you to go through it one by one. Do not watch anything haphazardly. However, the sequence we have provided, please follow the sequence. Getting directly into it. Now shooting star. As you can see in the figure, you will see that there is a uptrend. So first criteria for a shooting star to form is an uptrend. Okay, just listen to my words very carefully. It has to be an uptrend. Shooting star will not work on a downtrend. Shooting star will not work on a downtrend. So first of all, it has to be an uptrend. It will be a proper uptrend. Then from the highest point of the uptrend or close to the highest point of the uptrend, you will get something of a star like this. Something of a candle like this one, a huge upper wick, this is I drew you the body bigger, but it will be something like this, a huge upper wick with a very little amount of body compared to the wick. So the wick to the body ratio would be very less. Okay, that is the sign that the market might take a reversal. The primary reason being here, what does this mean? If you have gone through the support resistance class and the candlesticks basic class, you now will know by now that this means market wanted to go up, but at this price point there is a very much selling pressure from the bears. Market wanted to go up, but went up till this point, but found that there is a very strong pressure that has been created by the bears, which pushed the market down and it closed somewhat like this, right? So this is the basic of a kind of a HPR, you can say, or inverted hammer, you can say, whatever it is. This is basic price action. So if we see something like this on the top, we'll know that there is good amount of resistance in this point. We'll know that there is a good amount of resistance in this point. Okay. Then post that you will get a red candle, that is your cue to enter and take a short trade. Taking you to the white screen just to explain it a little more. So market will be moving in somewhat of a direction like this, upward direction, regular green candles, and suddenly from the top it will come and create a big wick and a lower body. Now down from this, it is obvious that here there is a selling pressure. Now tell me, if I know that there is a selling pressure, if I know that is a huge wick, market is getting greatly rejected from this point, and the next candle that I get is a engulfing candle, why will I not take the trade? This is a perfect trade. This is a perfect price action is matching, technique, everything is matching. Everything is on point to point in this trade. So We'll just wait for the breakout of this level or this level. If it is an engulfing candle, we'll short the market. If the market is going like this this sort of a uptrend, we'll get 4 targets, 1 2 3 4. You can take any target, exit at any target. Clear? So I'll just go through it once more. I'll just take you back to the slide itself. If you see here, so we have to wait for a uptrend, and if you are looking to trade a shooting star, we have to wait for some sort of a candle like this. Then the next candle, when it is giving a good engulfing candle or a good body candle, or else it is breaking a very good support level which is very close to this candle, we will take the entry. Targets I told you. By now, if you are clear with support and resistance, you will be easily making targets. Correct? Okay. If I take you to the live example, see, if you see at this point, market was in a proper uptrend. This is a daily time frame. This will be much more, it will take you time if you trade this, but listen to it, like, see. So market was in a proper uptrend here. Then next day it opened gap up and made a doji with a huge HPR. Uptrend fulfilled, HPR fulfilled. Next day engulfing candle fulfilled. What we will do? 3 ticks, we will take the trade. And we will make good profits. Since this was a gap up, I would suggest to take the last gap or the price, to trade the gap, that is. This will be the target. This is an extra tip. You will be getting it in the next classes, but whenever gap up is there and you are trading some a shooting star, you can trade like this. Okay, just an additional tip, this is actually this candle here, it is actually the middle doji part of a evening star. Just the wick is higher, wick is much more bigger. Do not confuse it, but normal price action, what it says, if it is giving a huge HPR, that means selling pressure is there. Next candle, if I get red, I will short the market. Does not matter the pattern. Okay, so this is how you trade, and hope you are liking the classes, and see you in the next class. Hello everyone, this is another class in the candlestick advanced segment. In this class, we are going to study 2 candle formations. One is the dark cloud cover, and the next slide is white soldiers. Let's first explain the dark cloud cover. Dark cloud cover, if you read this, it is written that dark cloud cover is a bearish reversal candlestick pattern where a down candle, typically black or red, opens up above the close of the prior candle, typically white or green, and then closes below the midpoint of the up candle. Too much written? Don't worry, I am here. See, so generally what we mean by dark cloud cover, in normal common terms, what does mean? That it is going to rain. Rain means what? Rain does not go up, rain will fall down. So dark cloud cover generally means it is going to rain, rain does not go up, it falls down. That signifies market might go down when there is this pattern formation. Clear? Okay. Now from the figure you can see uptrend, from the figure you can see this is an uptrend. Market gave hopes to the bulls, or the bulls were winning here, and suddenly you see a engulfing candle. This is engulfing because it is covering up 50% of this candle. That is why we are telling it as engulfing, which you have prepared by now, because we have explained this in the candlestick basics class. So in a uptrend, if we get in a proper uptrend, after a green candle, after a bullish candle, if we get a bearish engulfing candle, that overall formation is known as dark cloud cover. Now generally you will see that after this formation has taken place, the market will reverse the trend, sometimes immediately, sometimes after a bit of consolidation, and then it will reverse the trend. So if we see immediate reversal, then we take the trade. If we see a reversal after consolidation, then we definitely take the trade. Cool. Let's go to the white screen once, just to give a proper explanation of this. So market will move like this will constantly move like this, and suddenly on the top it will form a candle like this. Post that, you will see, if we see a candle formation like this, what do? We understand that bears at this price point are winning. Correct? Bears at this price point are winning. Next candle, if we see a proper another candle of red, we short the market. Lot of targets on the uptrend. If you get an uptrend, there will be lot of support points, there will be lot of price rejections. Anywhere, wherever you feel comfortable, you take the trade and make that point wherever you feel comfortable your target. Clear? Now if the case is like this, say market really did not go down, say the market made another couple of, say, doji, one doji here, another big another kind of a doji here, another hammer here, and then it broke. Consolidation breakout. Whenever this happens, I'm stressing the fact, whenever this happens, we have to take the trade. Clear? Let's go to live example and see. See here, if we see here, uptrend of a sort, good uptrend, not a good, yeah, it was mostly an uptrend. In the long term we see it was an uptrend, then it formed a green candle, then the next candle was a kind of engulfing, covering more than 50%. Next candle only did not give a proper breakout, consolidated for 3 to 4 candles, then gave a breakout, and bam, it went around, say, 10-20%, because this is daily time frame. This is a very good pattern to trade, provided you have a good consolidation. If you do not have a consolidation, tell me one thing, if you do not have a consolidation, post this only, if you got another red candle, what will that become? Post that candle, if you get another red candle, what will that pattern become? Evening star. Of course, you're correct, evening star. This is a breakage of a evening star. Correct? Dark cloud cover is the midway through a evening star. So if you get the last candle, you will take the trade. If you do not get the last candle and you get the final breakout after a consolidation, then definitely take the trade. Okay, done. And moving back to the slide, there is another another candle formation that we call as white soldiers. It is nothing but three bullish candles back to back, the highs of which are generally higher than the previous one. If you see the figure, it is 3 candles back to back, the highs of which are generally higher than the previous one. Okay, so this confirms an uptrend, this confirms that the market is moving on uptrend, and generally we can enter in the third green candle, because if it is somewhat of a situation like this, one candle, next candle is higher, and the third candle's closing is higher than the previous two candles, then generally speaking, by price action, it is a suggestion that the bulls are winning, right? The bulls are winning. So not going on the white screen right away, because I don't think it is very necessary to go on the white screen in this one. The figure is self-explanatory, and generally if it is occurring in the downtrend, it is very good. You can enter in the third candle. I'll take you directly to the live example. If you see, same chart, this is the beauty of price action. You will get it, meaning you will get it everywhere in the chart. Not only you do not have to go like switch charts. Each and every chart will somewhat or somewhere present the candle patterns. Here, what is this? White soldiers. First is higher than the previous, second is higher than the first one, and the third is a big bullish candle with engulfing body. We have to take the trade. We take the trade. We enter. We take a profit of, I'll say this range. We take a profit of, let's see what is the profit percentage on this. 10%. So this is the power of price action, and this is the power of candlesticks. So with this we come to the end to the candlesticks advanced segment. See you in the next classes and the further segments. Thank you so much.